about the importance of process. We'll talk about earnings. We'll talk about VIXperation and OPEX as we get prepared for the week ahead, looking at markets and profile. Hi, my name is Josh, founder of TRADEWITHPROFILE. We're a skill development firm. So if you're watching this video, one of the things that should be a takeaway is learning on how to use profiling tools. So we're organizing the only indicator that every market participant can see, and that's price, to discern where price is being accepted, where price is being rejected, who's in control of the auction, where is that inventory, so that we can make better trading decisions. And we're going to start this week by talking about process. So last week, I had a failure in my process. I believed the whole week last week that we were in expiration last week, which if I had actually looked at a calendar or even stopped to think, oh, you know what? Like I actually know that OPEX is the third week of every month. That would have been different. That would have changed my outlook for the week because there are consistent calendar flows that take place as a result of these expiration cycles, particularly the more and more impactful we see market participants shifting towards options, specifically very, very near dated options as their core product for hedging. So, I mean, years ago, OPEX wasn't a big deal for futures traders. Today it's a big deal. And those expiration cycles are massive. So this week, we can confirm we do in fact have VIXperation on Wednesday, OPEX on Friday. What does that mean? So typically the week before OPEX is fairly bullish. We'd call that a Vanna week. OPEX week is more of a struggle. So that's where my process broke down. I was looking for weakness throughout the week last week, and it didn't come. Why? Because my calendar was off. So I say all that to say as a reminder to, as you're going through your process, make sure that there are checks and that, when you find process failures like that you go back and say, okay, what do I need to do and adapt to my process? So what I did is I went and I've put all of the expiration calendars on my actual calendar that send me alerts so that I can stay grounded in that and that doesn't happen again. Always got to R about those spots. All right. So with that, let's get into the week ahead and get an idea for what we're trying to do. Okay. Just a reminder on the macro narrative of where we're at. We are in a spot where we're hanging on rates. So what's gotten equity prices to where they are has been the expectation of rate cuts and the realization of rate cuts. We're still expecting 2 more rate cuts yet this year. Both of those will come after the election. So things like unemployment rate matters because of what that means for what the Fed will do with further rates. So we're watching that. The AI trade is still there. It's waning. We are in a corporate buyback blackout period that is led up to and through earnings. So we start earnings this week. And so that will be something to be watching. We do have an election in less than 25 days. And with the potential for the results to be contested, there's still the belief that that risk is underpriced, leaving us in a seasonal window of weakness. But the question that I'm asking myself is, are we seeing the correction for that by time? So sometimes auctions correct by price and sometimes they correct by time. When we go look at the charts and see how the price has moved, you could make the argument that we've had the correction leading into the election, and that in fact has been a correction by time, not by price. That being said, we are heading into OPEX week, and so if you look at the calendar of what could break between now and the election that could take prices lower, that would be earnings or OPEX. That being said, there are definitely some significant prices that we'll take a look at that are most significant for whether there could be some kind of breakage within the market. Okay, so with that, let's take a look at some charts and get a sense for where we're going from there. We're gonna start here. This is when I'm talking about underprice in the market, looking at the VIX curve and the relationship of price to volatility and hedging. We are not seeing participants run into and stay into hedges very long, especially not those longer durated. So the curve is very complacent, although we've held a pretty decent skew in puts. So there is some good inventory there. There's a lot of puts out in December. But you can see that after a couple weeks of balance, last week there was a break from balance higher to make new all-time highs. That certainly corresponds with a lessening of fear in the market, but takes us into complacency. As we've said over and over again, the cure for higher markets is complacency. The cure for lower markets is fear. So this is definitely a complacent market. That doesn't mean that we fall out of bed. It just means that there is a spot, an opportunity for us to either trade sideways or lower given the fact that we have participants who are not overly hedged as we're moving higher. What does that mean for other products? So let's start looking at some of these products as we go ahead. We're going to start with the ES and do a little bit of a review for the week. Okay, so let's just look at last week. We're going to look at the weekly profiles and the posture of the auction, get a sense for what's going on. Above last month's high, we did a little bit of a micro balance. So we started the week, pushed above the prior week's point of control, kind of this key 57.75 area we've been in for quite some time. So you can see there was a range here. We broke out of that late in the week, balanced around, and then pushed again. Successful at pulling the point of control higher for the week around 58.30. And so that's going to be kind of our initial key price that we're watching. Now, to the upside, what are we looking at? So we have 5,900 as a pretty significant price in terms of there's some good options inventory there. Beyond that 6K, those are totally within the realm of possibility for the week. However, given that we got OPEX and VIXperation, let's walk through some potential scenarios. Is that if we push higher early in the week, get that 5,900 or 5,950, if that comes early, what will that do to the posture? So we have 90-day here, 20-day here, 5-day here. So higher prices could take us into an extreme. So if we go up, then we could pause here to try to pull the 5-day higher. If we look above and then come back here, watch for buyers to step in, validate, and then push. But if they fail, then it's going to be a move back to 57.79. Overall, there's really no concern to the auction unless we can accept back below this area. So if we get below 57.30, 57.40, that opens the door towards larger liquidation and could finally take us back to the scene of FOMC. So you can see that we're still following that rate cut and holding that as we move higher. So back through 75, I think would be the warning shot, but that could certainly be bought below that, and then we could see a move back to 5,700. Although above, the big key takeaway is above 58.30, we're looking for higher prices towards that 5,900. And in fact, in terms of the trade plan for this week, so we do have earnings season and OPEX, but we're looking towards 59.50 and then weakness later. So strength early, following on, and then weakness later. No risk to the buyers unless we get below 57.75. As far as for Monday, what are we looking at? So we did have this kind of a weird trend day on Friday. What I mean by weird is that it was, I would call it a trend day. We had two distributions away from balance. We closed above that. We spent most of the time inside the initial balance though, however. 58.60, the key price there, expecting new RTH highs and, pushing toward that 5,900 area as kind of key to the upside. If we open in range, watch for a tag of 58.60 before push higher. If we gap, look for the push higher towards 59.60. If gaps hold, failure back to 59.60. And if we can get below 59.50, we could re-engage the trailing CPI VWAP, and below that, then that opens the door for a test back toward 5,800, the trailing non-farm payrolls. So there's non-farm payrolls, here's FOMC, here's CPI. We're holding all of these key references, and until we start getting through some of these composites, there's really no concern, okay? So opening range could test down to 58.50 before pushing higher. If we gaps that hold, we're running towards 59.50. Gaps that fail back to 60. And then below. So this is kind of key idea number 1. Here's key idea number 2 and 3. All right. That's it for the ES. Let's look at the NASDAQ. Somewhat similar story, although the NASDAQ has made finally some new monthly highs, but as the week ended, one time frame higher for the week in still holding a pretty large range here. So we really need to get above 500 and hold to break out toward the 20,800 area, which is essentially what we're looking for. Notice that value. So from the prior week, value has migrated higher. Also holding above the FOMC, all of the trailing catalysts that could have potentially, caused any issue to the market. Overall above 20,450, and we're looking towards 20,800 in terms of the trade plan for this week. So we matured the break from balance. We're above all of the key trailing VWAP. So this week we're looking towards 20,800. Earlier, weakness later. Keep an eye on 436. If we're below 20,300, that opens the door to 19,700. So we still have not revisited the scene of FOMC back here. What do I mean by 300? So here's some buying excess that defines a short couple day range. If we get below that, look for a move back toward 134, and that could signal larger move back towards 700. I think that's out there. Could be earnings that could drive that, but that's the least likely scenario. Most likely, as long as we're above 436, we're looking for higher prices towards 20,800. There's a naked point of control up there for the week. Early and then failure later in the week to solidify. Could also push higher and then trade sideways. So one idea is up and down. This would be second, and then this would be third for the week. All right, and keeping an eye on that area there. As far as Monday, it was an inside day on Friday. We're looking for a more directional day from the 440 area on Monday. Looks like we're already gapping overnight. So if we gap, we'll talk about those scenarios. But if we open in range from 440, even down to 400, we're going to push for new RTH highs toward 683. That closes a gap. Failure back to 440. So that would be to 683. Gap holds. I'm sorry. Let's do this again. So push this way. We're looking for 683. Gaps that hold. And then if we were able to accept below 383, that could open the door for us to test the bottom of this range. And it's below 320 that we open the door to larger prices. Okay. So below 440, look for a test to the bottom of the range. And then below 320, things get a little more sticky. But looking for higher prices, especially as we're going towards tech earnings, more likely to keep pushing. Russell, fairly weak through the week. We're watching that 2216, broke lower, made new weekly, monthly lows, and yet recovered with a very strong day. Almost took back the prior week, closing on the high, multi-distribution trend day around 2250. Value did not follow price. So value remained down here at 2216. But you can see we got back above the FOMC. So the Russell had been failing and trailing behind that. Now they're back above it. That's great. For Monday, as long as we're above 2233, we're looking for new RTH highs towards 2275. Failure back to 2250, and then below 2230, and we can come back to 17. Looking at that from, for the week, as a weekly basis, this is a new bullish posture. So you can see all of the inventory here. As long as we can stay above 2215, the auction can push toward ultimately 2300. However, if we fail back below that, that could cause a reversal and then push back towards 2175. So most likely this way, that would be second. And then watch this key area as support to the auction. And then let's look at crude oil. Okay, last week, after making new weekly highs and new monthly highs, failed and liquidated back to test monthly VWAP. That was supportive to the auction and ended up balancing between weekly and monthly VWAP at the close. We did pull the 5-day higher. We're now between the 5-day and the 20-day and the 90-day in between. So in other words, there's a lot of inventory in there. That means that 75 is pretty key to the auction as we start. If we're above that, we're going to look for a test either to this buying excess or this selling excess. Either way, depending on where we are relative to the 75.50 area, above that and pushing ultimately towards 80. It's kind of the key idea there. If we're below 73.95, kind of this key area here, that opens the door back to the 20-day. So keep an eye on that monthly VWAP as the trail. We do have EIA on Thursday instead of Wednesday because of Indigenous Peoples Day to start. On Monday, okay, it was an inside day. Watch 75.50. Above that, we're looking for a push to clean the singles toward 77.50. If below, we can test toward 74. That would be the trailing EIA VWAP. Below that, we have a naked point of control at 73.28. So watch, right around the 74 area. Failure there, sets the stage as we move back towards the 20-day. If we can hold above that, it could be choppy between here, above here, more bullish, right? So that's kind of one. Gap would be up there. It looks like we're going to gap lower. So that's going to be below the pre-IB bias. That makes 74 really, really significant to the auction. Okay. That gives us kind of our plan for what we're looking for on Monday. Let's look real quickly at what else we've got in terms of anything that stands out on the quick sheet. Overall expecting higher prices across the board on the equities. Bitcoin, I missed that one. Bitcoin definitely made the move towards 64K. They're almost there. Gold is balanced. So we'll definitely keep that one on the radar. I'm going to add that. Just going to add, call it break. So break from balance. So we're 2269. What's our weekly? So 2700. All right, that's just an idea, right? We'll see how that plays out throughout the rest of the week. Okay, gang. That should be enough to get you going for the week. Mind your risk. Watch your process. And that process can be everything from checking your calendar to how do you go about setting up your narrative and your scenarios for the day. And then, ultimately, how are you folding playbook ideas inside of that? We'll be back for the outlook for Tuesday shortly. And I hope you have a great week and a great session. All right. Peace.